Bitcoin's a skeeta like the new Derek Jeter, up over 2,000 on the day. I'll be breaking down the latest Bitcoin technical analysis, as well as breaking news. Fidelity launched a no-fee retirement plan for U.S. adults to invest into the pretty little bitty. Going up forever, Laura. And quoting the high priest of Bitcoin, Bitcoin was sent by God to un-F our money and save our souls. Can I get an amen? Also, we'll be discussing 2 billion lost in crypto hacks just in the first quarter of this year, 1.63 billion from access control flaws. Also, Go Mining launches a 100 million Bitcoin mining fund for the institutional investors, as well as UK trade bodies ask government to make crypto a strategic priority. Respect my authority. Also, Bitcoin price can hit 250 per coin this year in 2025 if the Fed shifts to QE, according to Arthur Hayes. Just blaze. As well as the breaking news of GameStop finishing raising their $1.5 billion to add Bitcoin to its balance sheet. Who cares about a roaring kitty? Boring kitty, not me. I'm for the bitty. I'm for the nippinator. I'm for Nipsey. Anyways, all this plus so much more in today's show. If you're new to the channel, important, smash the likes. Go ahead, subscribe. We're the #1 daily Bitcoin pod. Then ring the bell. Turn on all notifications to receive daily premium crypto newsletters every single day, 7 days a week, just like this. Today is pod episode 1951. I'm your host, JV. It's April 2nd, 2025. Trump's supposed to speak about the tariffs in 3 more hours. The markets will react accordingly. Thus far, Bitcoins are ripping like the new Scottie Pippen, up 2,000 on the day. And I got a new catchphrase. Bitcoin's a skeeta like the new Derek Jeter. Skeet, skeet. Volcano style. But anyways, I digress. Let's kick it off with our market watch, as we do each and every day. I got to keep you guys entertained. So as you can see, Bitcoin up 2.5% on the day, trading above 87.2. Ether correcting all the way down to 1900. XRP, Tron, Solana, and Cardano all in the green on the day. Checking out coinmarketcap.com. The current crypto market cap is currently sitting pretty at $2.78 trillion. The Bitty market cap is at $1.73 trillion, and we have roughly 86 billion worth of volume over the past 24 hours. And checking out the Bitcoin dominance, today we're 62% even, which means we're back on the climb. Ether dominance leveled out at 8.3%. Checking out top 100 crypto gainers past 24 hours. EOS has been leading the pack all week, up again today, leading the pack up 20%, followed by Radium up 10%, and Dexy up 6%. Which alts, if any, are you bullish on for the bull? Holla. And checking out the crypto bubbles, I like to use this to get a visual perspective on the day. And today, I'd say 75-25. Red over green. Zooming out on the weekly, unfortunately, 90-10 red over green. And zooming out on the monthly, very similar, 90-10 red over green, and very substantial losses across the board for the alts, minus just a handful, including EOS up 40% in the month, and Kronos up 30%, and Toncoin up 25%. And checking out the crypto greed and fear index today, we're 44. Fear yesterday, 34. Last week, 47. Last month, 33. And checking out the time chain calendar, we're currently on block height number 890,560. We have 159,440 blocks to go into the next halving, and you can currently exchange one fiat monopoly dollar for 1,147 sats. That's a divine omen because a 4 and a 7 is an 11, so ultimately that says an 1111. So stack the sats, put down the gats, pick up some Bitcoin caps from my man Sergio, of course, over at bitcoincaps.net. Let's kick off our next story, dive into a little TA, aka astrology for the broskies, and here's what's happening in the market. Bitcoin sales at 109, all-time high, significantly below cycle tops, according to Glassnode Analytics. And before we get deeper into the TA, here's some breaking news I wanted to share. Fidelity launched a no-fee retirement plan for U.S. adults to invest in Bitcoin. So that means every investor that has access to the Fidelity platform can now purchase Bitcoin with no fees. That's a phenomenal thing, and it's only going to help Bitcoin adoption. So So that's major. Also, Max Kaiser wrote some wise words. When strategy issues shares to buy more Bitcoin, they're not diluting, they are transubstantiating. We are witnessing something biblical. Everyone will experience their come to Bitcoin moment. It is the New Testament. It's Christ 2.0. Bitcoin was sent by God to unfuck our money and save our souls. Trump is only on stage 2 of 5 of the Bitcoin awareness, and Saylor is on stage 5. And if you don't know, let's break down what he's referring to. The map of the Bitcoin singularity, there's 10 levels. Level 1 is blame, despair, and apathy. Level 2 is fear and anxiety. Level 3, desire and craving. Level 4, anger, aggression. Level 5, courage and optimism. Level 6, satisfaction and trust. Level 7, acceptance, forgiveness, and giving. Level 8, wisdom, abstraction, as well as reason. Number 9, self-actualization. And number 10, illumination. And if you don't know, now you know. I also wanted to pull up this is pretty lit. Right here, it shows you where we're at. 94.5% of the 21 million Bitcoin has now been mined. Only 5.5% left of the Bitcoin supply to be mined over the next 115 years. And I believe that last bitty will be mined in the year 2140. And again, if you don't know, now you know. And diving into our TA, Bitcoiners who entered the market between 3 to 5 years ago have retained their holdings despite significant bitty price upside, according to Glassnode Analytics. This investor cohort, with a cost basis between the 2020 lows of 3,600, that was right after Novid, and the 2021 highs of 69,000 is still holding. And although the share of wealth held by investors who bought Bitcoin 3 to 5 years ago has declined by 3 percentage points since its November 2024 peak, it remains at historically elevated levels. This suggests the majority of the investors who entered between 2020 and 2022 are still hodling. Where my hodlers at? Holla at your boy. The chart shows the data from the realized cap, HODL Waves metric, splitting the Bitcoin supply into sections based on each coin that last moved on chain. Using this, Glassnode was able to draw a distinction between the 2020 to 2022 buyers and those who came immediately before them, quoting them right here. In contrast, over 2/3 of those who have bought Bitcoin 5 to 7 years ago exited their positions by December of 2024's peak. It reveals, reflecting their lower cost basis. And more recent buyers who formed a more speculative investor cohort, known as the short-term hodlers, have proven much more sensitive to the recent Bitcoin price volatility. And quoting the Giga Chad, volatility equals life force. Episodes of panic selling have occurred throughout the past 6 months as the bitty hit a new record high. As you know, on Inauguration Day, the current all-time high is 109.3. They also said the current short-term hodler participation does not suggest a speculation frenzy, something common to the previous Bitcoin price cycle tops. Quoting them here, short-term hodlers currently hold around 40% of the Bitcoin network wealth after peaking near 50% earlier in the year. This remains significantly below the prior cycle tops, where new investor wealth peaked at 70 to 90%, suggesting a more tempered and distributed bull market thus far. And there you have it, yo. And I promised to pull up some of the live charts, so let's do that really quick before we continue with any of the news. And I checked the chat once again. So as you can see here, live and in the flesh, live chart action, Jackson satisfaction. This is the 10-minute chart via TradingView, via the Coinbase exchange. And as you can see, the momentum we have been building, which is a beautiful thing. Past couple of days have been bullish, and we continue to pump. No particular targets on the 10-minute, but definitely a bullish overall flow. And zooming out, we'll go to the hourly. The hourly chart shows a falling wedge, but followed by a recovery. You can see very bullish on the hourly chart. We've been pumping all morning here. We do have a red bull target sitting at 87.5, which is roughly a $500 jump from the current price action. We also have a bear scenario sitting at 79 Gs. And zooming out from the 1 hour, we take a look at a 4-hour chart. As we continue to work our way backwards, we do have a rising wedge formation sensation here. We have 3 bull targets on the radar, one sitting at 113.7. We have another bull target in the red here sitting at 105.5, and then the blue target 103.6. We also have 2 bear scenarios here, one at 79.3 and another at 65.6. And zooming out from the 4-hour, we take a look at a daily, and as you can see, big green candle forming on the day. Yesterday we had a big green candle, and the day before itty bitty green. That's 3 consecutive green candle days. Let her rip, tater chip. Rising wedge formation followed by the falling wedgie. We have 2 bull targets, one in the red just shy of 113 and one in the teal sitting at 113.7, which would take us to price discovery. Current all-time high is 109.3. 2 bear scenarios. We have one sitting at 68.699 and a super bear all the way down at 49. Zooming out from the daily, we take a look at a weekly. The weekly says it's going up forever, JV. We have a bull target still at 124. That's the cup and handle target, which have literally been printed here for several months now as we cover each and every day. And we finally got some bullish momentum, so hopefully we get a strong weekly candle close, but we're only halfway through the week. And zooming out from the weekly, we take a quick look at the monthly. And the monthly chart says thus far green, only 2 days into the month. For the month of March was a red candle close. February was a big red candle close. January was in the green. December was in the red. November was the most bullish candle close we have seen thus far. And if we can repeat the November bullish Godzilla candle, we jump up 30,000 from the current price action, right back to price discovery, all-time highs. And if you don't know, now you know. Let's continue, fam. Next story of the day. And again, welcome everyone joining us. Let's start with these hacks. 2 billion lost in crypto hacks just in the first quarter of the year. 1.63 billion from access control flaws. That's right. Over 2 billion was lost in cryptos already this first quarter, according to a report shared by crypto security firm Hacken. Nearly 1.63 billion was lost just access to control exploits. Vice President of investigations at crypto forensics firm AML Bot shared that the exceptionally high figure is mainly attributable to the recent hack of the crypto exchange Bybit, which was considered, I believe, the largest hack in crypto history. The data is similar to that recently shared by PeckShield. The competing firm's report excludes scams, suggesting crypto hacks total 1.6 billion just to the first quarter of 2025, and I believe that's 1.4 billion of which came from Bybit. Late February reports indicate the North Korean hackers behind the 1.4 billion Bybit hack control over 11,000 crypto wallets used to launder the stolen funds. The increasing participation of North Korean state actors highlights increasing sophistication and scale. That also goes to show you that North Korea is one of the largest Bitcoin hodlers because the government and these hacking groups continue to accumulate mass Bitcoin. This hack had a significant impact on the quarter figures. This is particularly clear when one considers the entirety of 2024 saw a total loss of only $2.25 billion. Hacken shared a key lesson on the subject, quoting Hacken here. Securing digital assets requires more than just secure on-chain code. The entire infrastructure, from front-end interfaces to internal processes, must be equally hardened, as all it takes is a single weak spot to wreck the entire system. Facts. Hacken's report highlighted that the past few months saw even the biggest centralized and decentralized players falling victim to operational failures, access control weaknesses, and in a few cases, social engineering. The quarter did not see any notable new exploits, but rather the continued effectiveness of existing attack vectors. The report further highlights, while smart contract vulnerabilities remain an issue, most damage is now caused by failure in people. Go figure. Processes or permission systems. This is also reportedly the third quarter in a row that has seen the top exploit by a multi-signature wallet-related hack. The Bybit hackers compromised a safe wallet front end. Previous hacks involving multi-sig wallet implementations or management include Radiant Capital hack of Q4 2024 and the WazirX hack of Q3 2024. Scams also resulted in large-scale damage, with hack and data attributing almost 100 million of losses to phishing scams, which is very common in crypto, and 300 million in rug pulls. Also, Jane highlighted a trouble trend in crypto scams becoming an industry. Quoting them here, the most worrying trend is the professionalization of the scam networks, where criminals operate with startup-like efficiency, including training programs for scammers, internal quotas, and multi-stage laundering schemes using platforms like Hoan Pay. I'm sure I'm butchering the name there, but the statements follow the mid-January report, often described as the largest online illicit marketplace to have ever operated, highlighted that the service has seen its monthly inflows increase by 51% in just half of a year. This growth followed the platform's deployment of its USD peg stablecoin, and financial services dedicated to illegal activities. Now, here's a reminder I like to reiterate typically every show: not your keys, not your coins. Learn how to properly self-custody your cryptocurrency, because if you leave it up to the exchanges or a third party, you don't really own the crypto. You're not in control of it, and a lot of bad things can happen, including bad actors could hack the exchange. The exchange can file Chapter 11 bankruptcy, like we saw from FTX, which was once the second largest crypto exchange in the world. So I can't stress enough caution. Just be very careful. Shit happens too often, unfortunately. Let's discuss this $100 million fund moving into the Bitcoin. Go Mining launches a 100 million Bitcoin mining fund for the institutional investors as adoption continues. Go Mining is a platform that allows users to mine Bitcoin through data centers, is now launching a 100 million Bitcoin mining fund for the institutional investors, custodied by BitGo. The fund promises annual distributions from mining yield and strategy that focuses on Bitcoin rewards and reinvestment. Let me know if you ever heard of Go Mining. Their Alpha Blocks fund comes as more companies have added Bitcoin to the balance sheet, capturing enthusiasm surrounding the resurgence of the Bitty. Now, companies that have done so, including Japan's Meta Planet, we covered in great detail yesterday, another buy, and medical technology companies, Semler Scientific, have seen their stock prices increase, of course. And unlike passive equity investments, the Alpha Blocks fund offers direct exposure to mine Bitcoin via a fully managed compounding hash rate strategy. Quoting them here: Bitcoin rewards are reinvested to increase the fund's hash rate and to improve the miner efficiency, creating real yield-driven outcomes. Our model is built for performance, not market sentiment, and integrates utility-based advantages that listed mining companies typically don't offer. And according to the press release shared, Go Mining Institutional operates with 7.3 exahash of active Bitcoin hash power. This framework ensures compliance with relevant regulatory requirements and supports our focus on delivering institutional-grade exposure to the Bitcoin mining yield strategies. The fund will charge a 2% flat annual management fee with no performance fees applied. And while Go Mining's Bitcoin fund caters to the institutional investors, its flagship product is geared towards retail miners who may lack the funds to create a heavy-duty mining rig. And in 2024, it's revealed an attempt to gamify the Bitcoin mining through the use of NFTs. Institutional investment into Bitcoin and other cryptos like Ether have been on the rise since 2024 when the first crypto ETFs were launched. I believe that was January 11th. That's right. And regulatory clarity from Europe's MiCA and the enthusiasm for digital assets in the US might be changing institutional investor skepticism about cryptos. And in March, a report by Coinbase revealed that 83% of the institutions are planning a crypto allocation. I'd expect nothing less. I mean, look at all the institutions that have been acquiring and stacking the Bitty. They've been doing a fantastic job. Obviously, we have BlackRock leading the pack. Larry Fink, go home, get your shine box, Mr. Employee of the Month. We have, of course, MicroStrategy just made another 22,000 Bitcoin purchase. They now hold over 520,000 BTC. Nipinator still on guard downstairs protecting me. Thank you, Nipinator. Always doing God's work. Here's the latest with the UK adoption of crypto. Headline reads, UK trade bodies ask government to make crypto a strategic priority. That's right. Several British trade associations asked the Prime Minister office to appoint a special envoy dedicated to the crypto and for a dedicated action plan for digital assets and blockchain tech. The letter, the coalition of the 6 UK digital economy trade bodies urged Starmer's special advisor on business and investment for the greater strategic focus and alignment to deliver investment growth and jobs for the crypto industry. The group, which consisted of the UK Crypto Asset Business Council, Global Digital Finance Payment Association, Digital Currencies Governance Group, the Crypto Council for Innovation, and Tech UK, noted the US policy shift on crypto under President Trump and his appointed of a crypto czar. Britain's commitment to an economic trade deal focused on technological cooperation with the US presidents as a significant opportunity to mirror the United States' ambition in fostering leadership in blockchain, digital assets, and other emerging financial tech. The group recommended the UK appoint a blockchain special envoy, similar to the US, to coordinate policy, foster innovation, and position the country competitively in global markets. The trade bodies also called for the development of a dedicated government action plan for crypto and blockchain tech, including a concierge service to attract high potential firms. They added that the government should acknowledge and leverage the commonalities between blockchain, quantum computing, and AI tech, including the potential applications for government services. How many of you are out in the UK? Let me know in the chat, fam. Another recommendation was to create a high-level industry government-regulated engagement forum to ensure informed decision-making and cross-sector collaboration, quoting them here, with deep pools of talent, access to capital, world-class academic institutions, and sophisticated regulators. The UK provides an environment where digital assets and blockchain innovation can thrive. Now, the coalition argues that crypto and blockchain tech could boost the UK economy by 57 billion British pounds, which is 73 billion USD over the next decade, with the sector potentially increasing global gross domestic product by 1.39 trillion pounds, which is 1.8 trillion USD by 2030. Quoting them here, now is the time for the FCA to act, or the UK will lose out on this huge opportunity, which is digital assets and all the benefits this sector can bring, not only now, but over the next 20 years. So there you go. UK adoption, will it come? Sometime in the near future. You guys let me know your thoughts. Let's discuss Arthur Hayes' 250,000 biddy price target, then the breaking news of GameStop acquiring 1.5 billion via convertible note offering, which they just achieved. So they're probably in the process of buying the Bitcoin right now, and it gives them 6 billion cash to deploy. Let's see how much they actually put into their big first purchase for their balance sheet, and then we'll do some live Q&A and flip the pump. Or flip the pod into a pump watch. Granted, we're still pumping. So here we go. Headline reads, Bitcoin price can hit $250,000 this year before the end of the year if the Fed shifts to quantitative easing, according to just Blaze Arthur Hayes. That's right, 250,000 before the end of the year, with expectations of an increasing fiat supply remaining the significant catalyst for the biddy. Bitcoin's 2025 price rally may be boosted by the U.S. Fed pivoting to quantitative easing when the Fed buys bonds and pumps the money into the economy to lower the interest rates and encourage the spending during the difficult financial conditions. Quoting just Blaze Arthur Hayes, Bitcoin trades solely based on the market expectation for the future supply of the fiat. He also wrote, if my analysis of the Fed's major pivot from QT to QE for the treasuries is correct, then Bitcoin hit a local low of 76.5 last month, and now we begin that ascent to 250,000 per coin by year's end. Let me know if you agree or disagree. Now, the Fed reduced the Treasury runoff cap to $5 billion per month from $25 billion effective April 1st, while keeping the mortgage-backed security runoff steady at $35 billion. The Fed may allow the mortgage-backed securities to roll off without replacement, and the excess principal payment might be reinvested into treasuries, according to comments from the Fed chairman, Jay Powell. Quoting again Hayes, mathematically, that keeps the Fed balance sheet constant. However, that is Treasury QE. Bitcoin will scream higher once this is formally announced. Other analysts are eyeing a more conservative Bitcoin price drop based on the biddy correlation with the global liquidity index. As outlined there, the growing money supply can push the Bitcoin price above 132,000 before the end of 2025, according to the estimates from Real Vision chief analyst Jamie Coutts. Hayes has been buying Bitcoin and shitcoins at all levels between 90,000 and 76.5, showcasing his conviction in the crypto market for the rest of the year. The pace of the capital deployment will increase or decrease depending upon the accuracy of his predictions. Quoting him again, I still believe Bitcoin can hit $250,000 by year end, because now that the BBC has put Powell in his place, the Fed will flood the market with dollars. That allows Xi, the president of China, to instruct the PBOC, Public something Bank of China, to stop tightening monetary conditions onshore and defend the dollar-yuan exchange rate, which increases the net quantity of the yuan. And despite the optimistic prediction, many market participants are betting on a lower Bitcoin price top for the end of 2025. But you guys let me know your thoughts. Here's via Polymarket, the largest one. What price will the Bitcoin hit this year? And only 4% of you believe $1 million, 9%, $250,000, 12%, 200,000, 23%, 150,000, 33%, 130,000, 48%, 120,000, and 60% of you believe Bitcoin will do 110,000 before the end of the year. So pretty wild. And quoting him again, long-term positions remain intact, but near-term momentum appears tethered to unfolding macro headlines, according to the dispatch editor at digital asset investment platform Nexo. And if you don't know, Now you know, broskies. All right, fam. Now for our feature story of the day. GameStop finishes $1.5 billion raise to add Bitcoin to its balance sheet. That now gives them roughly $6 billion worth of fresh capital to deploy into the pretty little bitty going up forever Laura. So this is major news. And as shared here, GameStop labeled the indenture for its convertible bonds as Project Rocket in the file name submitted to the SEC. Let's go, Project Rocket. Game on, fam. This is pretty massive. Video game retailer GameStop Corporation, as you know, is GME, finished a convertible debt offering that raised $1.5 billion with some proceeds earmarked for buying the pretty little bitty. The offering was initially set to raise at least $1.3 billion, but purchasers opted for an additional $200 million aggregate principal amount on the notes, according to the GameStop April 1st filing with the US SEC. Quoting them here, the company expects to use the net proceeds from the offering for general corporate purposes, including the acquisition of Bitcoin in a manner consistent with the company's investment policy. The convertible notes are debt that can later be converted into equity and are scheduled to mature April 1st, 2030, so has a 5-year term, unless earlier converted, redeemed, or repurchased. The conversion rate for the notes will initially be 33 shares of common stock per $1,000 principal amount of the notes, according to the filing. GameStop shares didn't see a significant move following the close of the convertible debt offering. GME closed April 1st trading day up 1.3% at $22.61, as you can see here on your screen, and only saw an extra 0.5% bump after the bell. And positive shareholder sentiment saw the stock jump nearly 12% to $28.36 on March 26th, the day after GameStop announced its Bitcoin plan. But its fortunes reversed the next day, with GME shares dropping nearly 24% to $21.68. Analysts at the time suggest the chilly reception reflected shareholders' fear of GameStop's deeper problems within the business model. On March 25th, GameStop confirmed that it had received board approval to invest in Bitcoin and the US dollar pegged stablecoins using the notes and its cash reserves. Those reserves stood at $4.77 billion as of February 1st, compared with $921 million a year earlier. So within 1 year, they grew their cash reserves from $920 million to $4.77 billion. And what does that tell us now? That they have $6 billion in cash that will wither away like a melting ice cube if they don't deploy it into the hardest asset known to mankind, the one and only apex predator. Pretty little bitty going up forever, Laura. Now, GameStop is a relative latecomer amongst public companies creating Bitcoin treasuries. As we all know, MicroStrategy was the first publicly traded company to put pretty little bitty on the balance sheet. That was back in 2020, and they've been crushing it ever since. And a slew of others have already added Bitcoin to the balance sheet following the Sailor put. The video game retailer previously made forays in the crypto space with a crypto wallet for its users, which it eventually shut down in November of 2023 due to the regulatory bullshit. And GameStop is also considered the first example of a meme stock success after the short squeeze of 2021 that sent the stock surging over 1,000% in a single month as traders flipped the table on the hedge funds that had been making money, shorten the company. And this is important because of I would say, the ethos behind the company and the investors. They don't like Wall Street. So if we could basically short Wall Street and long Bitcoin, I think that's precisely what they're going to do, because Bitcoin severs the head of the central banking cartels. And if you don't know, now you know. Bitcoin's their Achilles heel. So if you want the ultimate revenge, you want the ultimate payback from the central scammers of the world, Project Rocket, baby, to the moon. And if you don't know, now you know. And again, welcome everyone to the live stream. There's a Q&A segment. I'm going to stick around for an additional hour. We'll kick it with the fam. Welcome everyone joining us. Over close to 1,400 people on the tri-stream, still live on X, Rumble, and YouTube. And as I promised, granted we're still pumping, which there's a good probability we will be, we'll flip it into a pump watch. We'll pull up some of the charts and we'll see how the markets react to Trump speaking about the tariffs. And I believe that's at 4 p.m., so less than 2 hours and counting. You feel me? And we'll play some new Chandy music as well. As I said, we updated the playlist. Pump and dump are both beneficial to the hodler retaliation strategy if necessary. By any means necessary. Like a young Malcolm X with the flex. Bitcoin's a skeeter, like the new Derek Jeter. Bitcoin ends neo-feudalism. There you go, Ryder.